Hello everybody. So in this video I'm going to try to answer, will we bounce back next week? That is of course the question that is on everybody's mind this Saturday morning, as we've had an awful week, an absolutely awful week for anybody who was into crypto or into any type of high growth stocks. Indices were fine, but most viewers on this channel are stock pickers. We're not but picking indices, we're picking stocks. And so we are hurting if we are picking stocks, especially the hypergrowth stocks, which is essentially the only stocks I cover on this channel. So first of all, a reminder, volatility is the price paid for returns. So if an asset, the higher volatility the asset has, the higher the return over the long run. I.e., if you are not willing to endure a 50% drawdown, you can't get access to the 100% upside. And so at the end of the day, volatility over the long run is skewed positive. It's skewed upward. It is upward volatility. But that means that on your way to a 10x, on your way to a 100x, there will be maybe 10, maybe 20, 50% plus drawdowns. This is the famous chart of Amazon and Bezos sitting through something like 18 or 19, 50% plus drawdown over a, 22 or 23 year period of him owning the stock. You have to be willing to endure the drawdowns to the downside if you want to have access to the upside. But over time, the drawdowns are nothing compared to the upside, and you gotta be in the asset and you can't know when there's a upside. So anyways, that's point number one. Point number two is, it was such an ugly week and an ugly month, and especially cruel, I think is the only other word I'm going to use, because of course so many influencers were pumping Moonvember, October, really not helpful at this point to have done that. I pride myself on not really having done that on this channel, even though I'm suffering just like everybody else. But anyways, we had the trade deal with China, that was a big sell-off. And we had the end of a government shutdown, that was a big sell-off. We can't catch a break. And this has been the theme of the 2020s. This is not just 2025. Ever since the events of 2020, we've been in this such weird market. You may remember the year 2022. You may remember the year 2020. So many opportunities to lose our shirt as investors. And the 2020s are an awful decade for investing. And I think it's going to be like that until the end of the 2020s. Let's talk about the Fear and Greed Index. So first, the Crypto Fear and Greed Index, which tends to be more bearish than the regular stock, but you'll see regular stock Fear and Greed is no better. So in the past 2 years and a half, there has been only one spot where the Crypto Fear and Greed Index has been worse than it is right now, and it was at the bottom of Liberation Day. You may remember April 2nd, Liberation Day, the announcement of tariffs. Bitcoin dipped to 76,000. The Fear and Greed Index back then was 15. So right now, we are a rounding error away from being at the same level. We're at a 16 right now. And so that's the second lowest in a period of 2 years and a half, and we're definitely we've only spent a handful of days, like less than 5 days, in this territory over the past 2 years and a half, and so I think this is important to note. This is an important indicator. Usually when everybody's fearful, I see 2/3 of my Twitter feed calling for a bear market in Bitcoin and us having entered a bear market. I see some people saying, oh, we never had a bull market. So everybody, even the most avid followers of Bitcoin, are like saying, oh, it's the end. And, what does that mean? Typically, when that happens, sometimes it may mean something else. At least that's the hope that I have. That's not what I'm saying. I don't care. I'm a long-term holder. To me, Bitcoin over the long run, I have little doubt that it will be worth well over $1 million. But, it's going to be in the 2030s. And yeah, sure, if you're in your 80s right now, well, that sucks. That doesn't help if you're in your 80s right now. But if you're not in your 80s, you should be very happy about that. Anyways, it's an opportunity, in my view. CNN stock, fear and greed. CNN stock, fear and greed. We're at a 22, so you can see we're super, super low. I didn't go back into the history, but I'm sure we're back at April levels. We're super low on the fear and greed. No idea why there's such a fear in the market, but everybody's fearful. I suppose AI fears is the crux of the story. People are spooked by, say, the value of NVIDIA, at $4.5 trillion. People are taking Palantir as kind of a poster child of an overvalued company. But as Tom Lee says, Palantir is likely an N of one, and, it's not true for a whole sector. AMD, I find it more richly valued than NVIDIA, but AMD is certainly not overvalued in my view, and NVIDIA, to me, I would argue, is probably the cheapest Mac 7, certainly cheaper than Tesla. And NVIDIA earnings on Wednesday probably spooks the market. So I think that fear may have to do with the AI fear. And you had a Sam Altman saying, "Oh, we want to IPO for $1 trillion, IPO OpenAI." So people throw these numbers around, and people are very fearful. I think there is a much more fundamental reason for why we have dumped so hard this past week, which is banks missed another paycheck. Federal government employees didn't get a second paycheck, and that's more than 1 million, well over 1 million people didn't get a second paycheck, and so the banks, being fractional reserve banking system. And there's no such thing as a 3% ratio anymore. It's pretty much you can create the money galore. It's commercial money creation galore right now. They removed that 3% ratio during the events of 2020. So as those people with those bank accounts keep making their payments to their mortgages, to I don't know, their living expenses, etc., the money is leaving the banks and it's not getting replenished. And so people are using their savings, their cash on the checking account is just dwindling, and it's not being replenished, and that creates a giant liquidity hole. Now, this liquidity hole should be, starting Sunday, super checks are being issued, as they call them. So quick checks that cover the unpaid payments. So more than 1 million people, nearly 2 million people are going to get those checks. And they do it by agency to agency. But essentially, most agencies will receive or have received the checks by Monday. Some agencies, like I think the Department of Agriculture, is like Wednesday. So it depends on the agency. But there's a bunch of checks coming in Monday, Tuesday, and Wednesday that should ease a lot of the liquidity issue that these banks have. And, these banks, when there's a liquidity issue, they're investment arms. It's not like they can, take a lot of risk in the market. There's compliance that say, hey, we can't take risk right now. I think this is a big issue in the market right now. As soon as the liquidity flows back in the system, as soon as the Treasury General's account gets spent, and there's contractors too, right? We don't know the size of how many contractors haven't been paid, but that's another aspect of that story. As soon as that money is spent, we should see liquidity concerns ease, and some of it hopefully flowing back into risk assets. Of course, everybody is talking about how strategy is down 50% in something in a matter of 6 months or something like that. Well, I want to call your attention to HIMS. HIMS is down, I guess a little less than strategy, is down 41% in a period of 29 days. So in many ways, a lot of frankly very compelling growth stocks, in my view, are also down 40 to 50%. And so when I think of crypto, I tell myself, well, this is not crypto specific. This is any type of super high growthy stock, which would just entirely dumped. Everything dumped. Every smaller asset dumped. Now, even Tesla or NVIDIA, now these are $1 trillion plus assets, so they're not going to dump as much. But if you really think about this, a 14% drop in, say, Tesla, and by the way, yesterday at one point Tesla dropped below 380 or something. So that would have been, close to 18% or something like that. That's a huge drop for a $1 trillion company. So when a $3 trillion company, or a $4 trillion company loses 12%, it's logical for a $15 billion company to lose 40% essentially, because when you're taking money off the table, you're taking much more of the money allocated to, say, a stock like HIMS off the table than you are taking of the money to a stock allocated like Tesla. Essentially, that's essentially how I explain it. There's also like these are into big indices, so it creates a buffer. But nonetheless, both of these stocks, by the way, have had enormous catalysts recently. If you follow HIMS, I recommend watching at least the HIMS and Hers presentation of labs. To me, they are going to disrupt physicals. This is a much bigger story. HIMS is a much bigger story than a ED pill company. And I'm halfway through watching this interview with John Barron. Again, outstanding stuff. Elon Musk is an outstanding value creator, in my opinion. And again, we keep having good news and over good news after good news, and the stock is just doing what it does. And of course, I'll conclude this video addressing the elephant in the room. So as I record this, we are $233. So I guess we are above 100. But unfortunately, Bitcoin didn't do too well yesterday in the afternoon. And so strategy trades, kind of like correlated, highly correlated to Bitcoin. And so we are at this unbelievably low price of strategy. It's now trading at a 1.2 MNAV. Basic MNAV is 0.94. And of course, are we going to bounce back? That's the big question for strategy. I guess we will have to wait until Sunday night to see what happens to the price of Bitcoin. The price of Bitcoin tends to react on Sunday night when Korea opens, when Southeast Asia opens up. It's late in the US on Sunday night, and you start to see the flows coming out of Asia, and they kind of set the tone. So we'll know perhaps Sunday night if we're gonna have a good Monday or not, and then we have a very big announcement on Monday morning with Stream. So $715 million should have been bought via the Stream new preferred that they issued. And we also know that he likely did a lot of ATM on stretch, not the past 1.5 days, but the first 3.5 days of the market. So from Monday to Wednesday midday, what am I saying? Thursday midday, he should have ATM'd a lot on stretch. So that's 3.5 days. So that's 3.5 days. So that's a lot. That's 4.5 days. Sorry about 4.5 days. It's late as I record this. And lastly, calling your attention to this 7-minute interview. When you watch the interview, he's not worried at all. I don't know how that's possible. Like, there was a piece of FUD spread against the company, selling this company sold Bitcoin, and Saylor looks bullish as ever, unworried as ever. You may have seen some of these clips of Bitcoin Amsterdam also circulating, talking about, of course, the difference is that a perpetual preferred doesn't need to be repaid. It's a dividend. The board can skip the dividend. There's a lot of things that you can do with preferred. Preferreds are not debt. Preferreds are part of your equity stack. And so it's not leverage per se. But anyways, the market really misunderstands this stock. And it's down 50% in about 6 months. It got battered. But can you say that strategy has gotten battered, say, as much as a stock like HIMS has in the past 29 days? Probably not, because it was a 6-month thing. And you may remember Tesla, the roller coaster that Tesla has been for the past 5 years, and yet we are doing well now with Tesla. So again, volatility is the price you pay for these higher returns. Enjoy the ride, enjoy the moment. As Saylor says, you can't get on a rocket and not expect the G's, the gravity pull. You can't expect a shakeup. There is a shakeup when you are boarding a rocket. Anyways, this was not investment advice, not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.